We're now going to take a look at the next problem, problem 5 in this chapter. So Nordtown Company is a marketing firm, and the company's trial balance as of August 31st is shown on page 79 here. It shows cash, the debit of $10,590, accounts receivable, a debit of $5,500, office supplies, a debit of $610, office equipment, a debit of $4,200, accounts payable, a credit of $2,600, and then the capital account is a credit of $18,300. During the month of September, the company completed the various transactions. So what we're supposed to do is begin by opening accounts in the ledger for the accounts in the trial balance, and then in addition we're going to open some other ledger accounts. So what we'll do is start by going in here and opening up various ledgers. So as you see here, we are going to start with a ledger shown as cash, account number 111. Then next we'll have a ledger, accounts receivable, number 113. We'll then have office supplies, account number 116. Office equipment, account 146. So moving on, accounts payable. Now you can see it's a liability, and our account numbers have moved from the 100s to the 200s. So our liability accounts are 200 accounts. This one is 212. Our capital account is in the 300 range. So D-Geta Capital, account number 311. D-Geta Withdrawals, account number 313. Then we've got our revenue accounts. Marketing fees would be a revenue. They're in the 400 range, account number 411. And then we've got various expenses. Salary expense, number 511. Utilities expense, number 512. Rent expense, number 514. And then advertising expense, number 516. So we're supposed to take those trial balance accounts and begin a balance. So we're going to go to the cash account and show a beginning balance of August 31st of $10,590. We'll do the same with accounts receivable of $5,500, office supplies of $610, office equipment of $4,200, and then our two credits, the accounts payable and the capital. So if you look here, you can see we're starting with our cash account, and our cash account starts, we show August 31st balance, a debit of $10,590. Then accounts receivable, August 31st balance, a debit of $5,500. Office supplies, August 31st balance, a debit of $610. Office equipment, balance, $4,200. As we move down, our accounts payable on August 31st has a balance of a credit $2,600. D-Geta Capital, a balance with a credit of $18,300. And then we have, I guess that's everything. So we have all of our accounts already set up, and we have posted the balances as of the trial balance on August 31st. So that was the first step we need to do. Now the second step we need to do is to show the various journal entries. We're going to enter the September transactions in the general journal. So paid rent for September of $650. As you can see in our journal, we're going to create a journal entry to show on September 2nd a debit to rent expense for $650 and a credit to cash for $650. That's all I want you to do. Do not post these two numbers right here. The next says received cash from customers on account, $2,300. So this doesn't have to do with any revenues. This merely has to do with receiving cash from accounts receivable. So you'll see on September 3rd we debit our cash of $2,300 and we credit the accounts receivable of $2,300 to record receipt of cash on account. Remember, accounts receivable is an asset. We are now reducing our asset because we received the money. So we're crediting this accounts receivable because we are not due that money anymore. Next, on September 7th, we ordered supplies of $380. That will have no entry. We only ordered them. We did not receive them, nor were we billed for them. On September 10th, we billed customers for services provided of $2,800. So we earned some income. We aren't receiving the cash. We sent out a bill. So we're increasing our accounts receivable by $2,800, which is a debit, and we'll credit our marketing fees, $2,800 credit. Next, we made a payment on accounts payable for $1,300. Now this is money we owe. We are paying it, so we are going to reduce our accounts payable and reduce our cash. As you see here on September 12th, we debit our accounts payable for $1,300 because we are reducing it. We credit our cash for $1,300 because we're using cash. Next, we show received the supplies ordered on September 7th and agreed to pay for them in the next 30 days, $380. Now, this is when an economic event has taken place. So we will debit our office supplies for $380 and we will credit our accounts payable for $380. Next, it shows that we discovered some of the supplies were not as ordered and returned them for full credit, $80. So think of this. We ordered supplies for $380, we received them, and we realized that's not what we wanted. So we're going to reduce our supplies and we're going to reduce our accounts payable because we're not going to owe all that money. So we're debiting our accounts payable by reducing it, and we're reducing our supplies, so we're crediting our office supplies of $80. We're returning these supplies. We don't have $380 anymore. We only have $300, and that's why we're crediting $80. Next, we show we received cash from a customer for services provided, $4,800. So this is cash. We're going to debit our cash for $4,800 and we're going to credit our marketing fees, which is a revenue account, for $4,800. Next, we're going to pay the utility bill for September, $250. This is an expense, a utility expense. So on September 24th, we debit or increase our utility expense for $250 and we credit our cash for $250. Next, we received a bill to be paid in October for advertisements placed in the local newspaper during the month of September to promote Nordstrom Company, $700. This is going to be an advertising expense, increase an expense account of $700, and we're going to increase our accounts payable of $700. Next, we've got billed a customer for services provided, $2,700. We didn't receive the cash, we're billing them. So we're going to increase our accounts receivable by $2,700, credit our marketing fees, $2,700, which is a revenue account. We paid salaries for September of $3,800. So we'll show salaries expense, debit of $3,800, credit our cash for $3,800. Then we made a cash withdrawal of $1,200. We'll show that as DGETA withdrawals, a debit of $1,200, and we'll credit our cash, a credit of $1,200. The next thing that we're supposed to do is post the journal entries to the ledger accounts. Be sure to make the appropriate posting references in the journal and ledger as you post. So this is something new I want to show you. We're going to start with posting the first transaction. Rent expense, $650. Cash is a credit of $650. We are going to want to reference the account number for rent expense. So if we go down here to rent expense, you can see that the account number is 514. So we are going to show 514 up here as our reference number. Then if we go to the cash account, it's going to be 111. So let's go down and post to the rent expense first. As you see here, this reference is coming from Journal 22. So we're going to show September 2nd, the reference from the journal we're posting from, Journal 22, and we're going to show a debit here, $650, and we'll have a new debit balance of $650. Let's go to our cash account and post that credit. So as you can see here, with our cash, we started with a balance of $10,590 debit. We're going to go and post the September 2nd entry, Journal 22. A credit of $650 is going to give us a new debit balance of $99.40. If we go back up here and do the same for our September 3rd entry, I just want to show Journal 22. You see we're on page 22 in our journal. We're going to debit our cash for $2,300, credit the accounts receivable for $2,300. Again, we need to make sure we reference the specific accounts that we're posting. So, debit our cash, $2,300. You'll see here, $2,300, journal page 22, a debit for $2,300. We have a new balance. We'll also show a credit to our accounts receivable. Since accounts receivable has a normal debit balance, we're going to credit this, and we have a new balance now of $3,200 in our accounts receivable. Next, we have nothing on September 7th, but on September 10th we have a debit to accounts receivable of $2,800, a credit to marketing fees of $2,800. So we go to our accounts receivable, and September 10th, show the post reference, debit $2,800, and we have a new balance here of $6,000. We're also going to do the same with our marketing fees. September 10th, journal reference, page 22, we credit our marketing fees of $2,800, and we have a new balance here, credit balance of $2,800. Next, we go to debit, or we're going to post an accounts payable debit of $1,300, cash of $1,300. So we're going to go down to accounts payable, and we're going to show a September 12th debit of $1,300, which is going to give us a new balance here of $1,300. And our cash now is September 12th, Journal 22, a credit of $1,300 with a new balance of $10,940. Next, we have office supplies, debit of $380, credit accounts payable of $380. As you see, our office supplies is a September 14th debit of $380, which gives us a new balance of $990. And our accounts payable will show a September 14th credit of $380 with a new balance of $1680. Next, we have a debit to accounts payable for $80, a credit to office supplies for $80. We'll go to our accounts payable. We see a debit on September 17th for $80, which brings our account now a credit of $1,600, and our office supplies have been credited on September 17th for $80, which puts our new balance here at $910. Next, we've got a cash debit of $4,800 and marketing fees credit of $4,800. So we see here September 19th a debit in cash of $4,800, which gives a new balance of $15,740. Our marketing fees is a September 19th credit of $4,800 with a new balance of $7,600. Next, we have utilities expense of $250, credit cash of $250. We'll go down to our utilities expense and debit September 24th $250, come up with a new balance. And with cash, we're going to credit our cash on September 24th $250 with a new balance of $15,490. Next, we're going to post an advertising expense debit of $700, a credit of accounts payable $700. We go to advertising expense, post September 26th a debit of $700, and from there we show our accounts payable September 26th a credit of $700 with a new credit balance of $2,300. Next, we have accounts receivable, a debit of $2,700 we need to post, marketing fees, a credit of $2,700. So you see our accounts receivable on September 29th, a debit of $2,700. Our marketing fees on September 29th now have a credit posted to them of $2,700, which gives us a new balance of $10,300. We have salaries expense, debit of $3,800, credit cash of $3,800. Our salaries expense is September 30th, a debit of $3,800 with a new debit balance of $3,800, and our cash will be credited on September 30th for $3,800, which gives us a new running balance here of $11,690. Then last, we have a debit to DGETA withdrawals of $1,200, a credit to cash of $1,200. So if we go to our DGETA withdrawals, we show September 30th a debit of $1,200, new balance, debit of $1,200, and we will go to our cash September 30th, page 22 on the journal entry, the journal ledger, and our credit is $1,200. We have a new cash balance of $10,490. Next, it tells us to prepare a trial balance as of September 30th, 2014. We're going to do it just like we did the previous problem. The only difference is instead of T accounts, we have true ledger accounts. So we will go in the same order that we've done previously. Our assets with our most liquid first, our liabilities, our equity accounts, our revenue accounts, and our expense accounts. So we're going to use the same method. As you see here, we are going to post for cash the balance of $10,490. We'll do the same with accounts receivable. We'll show a debit of $8,700. Office supplies, a debit of $910. Office equipment, a debit of $4,200. Next, we have accounts payable, which is a credit account. We'll credit $2,300. Degetta Capital will credit $18,300. The next one, Degetta Withdrawals, you see it's a debit, so we'll place that in the debit column. Marketing fees, revenues is a credit of $10,300. Salaries expense, a debit of $3,800. Utilities expense, a debit of $250. Rent expense, a debit of $650. And advertising expense is a debit of $700. Here you see the trial balance. It's important to always look at the title. Make sure you show the title, Nordtown Company, trial balance, and the date. And then we have our accounts with the coordinating debit balance or credit balance. And the total here is $30,900, should be the total for both the debit and the credit side.